Hello, Business 330, Business Finance. This is Professor Hassey. It's Saturday morning, October 17th, and I'm speaking live and in color from Claremont, California. This is our last hybrid week lecture of our course. Boy, these cycles in Kappa go by rather quickly. Today we're going to be talking about, we're going to be reviewing assignment number 3, going over the solutions. The grades have been posted and the solutions have been posted to Blackboard. Going to do a quick summary of assignment number 4, which is due tomorrow, Sunday, October 18th. But there are extensions available if some of you need some extra time. Then we're going to do a quick look at the Road Kings. That is due not, as it says on the screen, October 14th. It's due October 24th, next Saturday. But again, extensions are available if you'd like extra time. And then we're going to take a look at a final examination outline. It's a fairly brief outline, but it gives you an idea what to expect when I post the final examination next week. And that is posted in Blackboard under the assignments and examination file folder. And the final examination will be posted next week, and it's due on October 31st. Next week, we have a regular class on October 21st, our regular time period. I'll be going over chapters 14 and 17, maybe a final review of assignment number 4, and if for anybody has any last minute questions on the Road Kings, we can take care of that then. I will try to get the assignment 4 grades back to you as soon as possible, hopefully by Tuesday, so you can have that information in preparation to help you with the Road Kings case. So that's where we stand here on this Saturday, October 17th, a beautiful Saturday, and hope you get a chance to get out and with a mask on and enjoy the day with your family. So let's first of all take a look at our Blackboard file folder. So let's go to that. And I've posted some things for this Saturday that should be of some help to you. First of all, under the assignments and final examination file folder, I have posted the solutions to assignment 3. We're going to go over those in just a minute. A spreadsheet file and a PDF file with the answers to the multiple choice. So that has now been posted. The grades have also been posted to Blackboard. Some students qualify for some extra credit work. If you would like to take advantage of that, I'm going to show you a file in a few minutes that you can do to give to me within the next couple of days as extra practice, and also will probably help you with the assignment number 4 and Road Kings, some extra practice for a capital budget analysis. And if you want to take advantage of that, please let me know. We have assignment number 4 to do this weekend. And then, as you can see, like I just mentioned, there's a final examination study guide with some study guides to help you see in advance what's going to be on the final. And we're going to take a look at that a little bit later today. So that's the assignments and final examination file folder. If you go to the Road Kings Trucks case file folder, a couple of things. First of all, you probably have already reviewed it, but there's an introduction video to the Road Kings case. And also I have published a sample, a case paper sample of an assessment file or a paper. Now, this is not the Road Kings case, so don't get anybody all excited and looking at this verbatim that it corresponds to the Road Kings case. It does not. It's a different case, a different class, a different year, but it gives you the format of what I'll be looking for. And we'll review that a little bit later on this morning as well. So there's a sample paper there that you can download to take a look at. Might help you in setting up your paper over the next week. And then finally, if we go to week 7, today's date, file folder, you'll see our agenda for today, which you saw at the beginning of class. You'll see the extra credit problem, and we'll look at that in just a minute. The extra credit problem for assignment number 3, and it's also an additional review problem for some of you who do not qualify for extra credit. You might want to try to do that one, see if you can do it. And then our reading for this week and next, we'll be lecturing about this in these particular areas next week in class, the PowerPoints and the specific sections of chapters 14, 15, 16, and 17. And also, if you have any spare time, here's a video you might want to be interested in. It's called How the Economic Machine Works by Mr. Ray Diallo. Mr. Diallo is an entrepreneur, hedge fund manager, hedge fund owner, and has quite a reputation, especially if any of you follow LinkedIn. He posts a lot to the LinkedIn application. He has a lot of commentary, a lot of views on the economy. And this video, though a few years old, is very relevant, especially to today. And it's quite long. It's about a half hour long. But when you have some spare time, and you're an avid business student and scholar, this might do you well to watch it. It's an interesting video. Gives you a nice background about our economy. So that's our Blackboard. So a lot of things have been posted in the last couple of days. Keep you busy over this weekend and into next, and get ready for next week's class. Okay, here's assignment number 3. Again, the grades have been posted. I've returned your files back to you. Also with any comments I felt is necessary for you to do better next time. Um, all in all, a pretty good performance by us. We still have a little bit of problems getting the templates and the formats for capital budget analysis. It just requires a little bit more practice by some of us, but overall, very well, very good. So here's the multiple choice areas of the assignment. The multiple choice, or part 1, was worth 35 points out of 100 of this assignment. The capital budget analysis section was 65 points. And so at the answers for the question, which of the following statements is correct for a project with a positive NPV? The answer is, well, if it has a positive NPV, then the internal rate of return has to be greater than 0. Has to be. Must be greater than 0, because probably if the NPV is positive, the IRR is going to be greater than your cost of capital. So A is that correct answer. If the present value of a project that costs $20,000 is $5,000, then when the discount rate is 10%, then the project's rate of return is greater than the 10%. That's what I just said in the question letter A. If you're making a profit of 5,000 and net profit, net NPV, and your discount rate is 10%, then your internal rate of return has got to be higher than 10%. What is the net present value of a project that costs $100,000 and returns $50,000 annually for 3 years if the cost of capital is 14%? Well, in our spreadsheet solutions for this assignment, I included that calculation, and here it is right here. If we have a cost of capital of 14%, and we're getting $50,000 annually, 1, 2, 3 years. If I use the NPV formula, net present value at 14%, $50,000 annually for 3 years, you get a total of $116,081.60. If I subtract the $100,000 project cost, I get an NPV of $16,081.60. And that is letter C. That's the correct answer. So there's the calculation there, if you might want to take a look at that. Question D, what is the internal rate of return of a project that costs $100,000 and provides cash inflows of $17,000 annually for 6 years? Again, I provided the spreadsheet calculation for that. So I went ahead and just did a quick and dirty IRR analysis. In this column was my investment of $100,000. And then I showed in subsequent 6 years, $17,000 being received. And then all I did is I applied the formula, internal rate of return, IRR function over the cells D through J, and I got 0.57%, which is the letter A for that answer. 0.5% using the IRR formula. And I just reconstructed what they gave me in the problem. Negative 100,000, 17,000 positive for 6 years. Stick that into the IRR function formula, and there we go. Okay, pretty good. Go back to the work. And the remaining questions, E through G, are all D. The profitability index selects the projects based on the largest return per dollar, because it's a ratio analysis with the net present value as a ratio to the investment. Which of the following investment criteria takes the time value of money into consideration? Well, the time value of money is for all three: profitability, internal rate of return, and net present value. The only one that does not do is the payback in years. All the rest of these use the discounted cash flow to determine the return, and in the internal rate of return uses the time value of money, discounting the investment in relationship to the cash flow. And letter G, when calculating a project's payback period, cash flows are not discounted at all. That's just a straight payback. We don't include any time value of money, as we just said in letter F. So that's the answers to the multiple choice: A, B, C, A, D, D, and D. 35 points for that. That's 5 points per problem. 5 points. And then we were asked to take a look at a capital budget analysis. And the key thing about this is, remember last week in our last class, we had that template. Remember that template? Let me bring that up here. I think I have it here. In our last class, here it is right here. We looked at this template in class on October 10th, where we determined the cost of capital as being 8.87%. And then we used that cost of capital. Oh, so we did not. That was a review of the weighted average cost, excuse me. And then we were given a problem where we had a cost of capital of 10% with these variables, and we did the variables. And this is the template that you should use. And this is why some of us had some problems with the assignment, this question, because you tried to recreate the template on your own, and some of you did very well, but missed a couple items. So notice we did this in class last week, and we put together these. We put together the net income, accounting income, by doing these variables, determining variable cost, fixed cost, depreciation. We determined the salvage value and the tax taken out of that gain. We determined the changes in working capital. Remember, working capital always starts in year 0 and ends in the final year, and the net effect of working capital should always be 0. If you don't get 0, then something's amiss. They all net out over the course of the life of the project. And then we put together the discounted cash flow at the cost of capital 10%, the difference between that and the investment, which is a combination of the cost of the asset and the working capital in year 0 based on year 1 revenues, net present value, internal rate of return, and so on. I gotta sneeze, excuse me. Sorry. So that's the problem we did last week, and you can use this as a template. You can use it in assignment 3, you can use it in assignment 4, you can use it in Road Kings. So remember that. That's an important file to look over. That's in our last week 6 file folder. So we go back to the solution for, or the problem. And they ask us to determine the net present value and the internal rate of return for Build a Better Mousetrap. And you are, in this case, I give you the inputs, but you got to kind of sort them all out. And that's one of the keys to this, is to interpret the data and then put it into that format that we've already been provided with that template, and put it all together. So we determined that the investment in year zero, the initial investment is always year zero, is $6 million. The equipment will be depreciated straight line over 6 years. That means 6 years into 6 million. That's $1 million a year with no salvage value. So we don't have to worry about that here. Excuse me, salvage value is 500,000. I'm sorry, I apologize. You're depreciating it down to zero, and then after 6 years, it will be sold for 500,000. There's the salvage value. Excuse me. The firm believes that working capital is at 10% of the next year's forecasted sales. Production costs are $1.50. The selling price can be sold for $4, and the project will end in 5 years when the trap becomes technologically obsolete. The firm's tax break is 35%, and the required rate of return on the project is 12%. Now, when they say the projects will come to an end in 5 years, that doesn't mean anything. That means you still take this data over 6 years. They're meaning that they're going to wind down the project, but you still have 6 years of cash. So notice, in year 6, they're selling 200,000 mousetraps. 0.2 in millions is 200,000. So let's look at the spreadsheet that we constructed for that. In tab number 2, and here it is. I was looking for a net present value of 116,649, and I was looking for an internal rate of return of 11.36%. A couple things notice, and I will get very picky about this in assignment 4 in the Road Kings. Make sure all your dollars are in whole numbers. Notice there's no pennies anywhere to be found. But also notice that anything that's not in dollars goes to the 100th decimal. We don't round when it comes to percentages or ratios or payback in years. It's always point, in this case, 36, not 11%, but 0.36. I will be a stickler on that down the road. So here's how we set it up. Notice it's a 6-year project. So year 0 is the investment year, or the initial year, and then each year. And then what I did is I did the template pretty much exactly like the template that we looked at last week. The only difference here is there's no fixed cost. There's no fixed cost. All right, that's the only difference. There's no fixed cost. So you don't have to worry about fixed costs. Sales, all right, at $4 a unit times the number of sales. 500 sales in year 1, 600,000 in year 2, 1 million in year 3, 1 million in year 4, 1 million times $4, 600,000 in year 5, and 200,000 in year 6. Our production costs are $1.50, so I take $1.50 times 500,000, 600,000, and so on. Depreciation is 6-year life of a $6 million investment. That's $1 million a year. My earnings before tax, interest, and taxes. Notice I lost money in year 6. The tax rate is given to us as 35%. So I take 35% of the earnings before tax. There's my tax. Notice in the 6th year, I get a refund because I lost money. So here's my net accounting income. I have a $500,000 salvage value, of which I fully depreciated the asset over its life. So I have to pay tax on that $500,000 gain. I fully depreciated, I fully expensed the asset. Now I get $500,000 as salvage in year 6. That's a gain. I have to pay 35% tax. So I just take 500,000 times 65%. That's my profit after tax. I add back in the depreciation of $1 million. That's a non-cash expense. And my working capital is 10% of the next year's sales. Remember, my working capital has to equal 10% of the next year's sales. 10% of 2 million, 200,000. My next year's sales is 2.4 million. Well, all I have to do here is I've increased it by another $40,000. So I have to take that $40,000 difference, multiply it by 10%. Now I have $240,000. Working capital is assets and liabilities. It's a going balance. It doesn't end every year. So notice my total working capital accumulated is 240,000. 240,000 is 10% of 2.4 million. My sales bump up to $4 million in year 3. That's another $160,000 of working capital. I've now accumulated $400,000 of working capital. 400,000 is 10% of 4 million. In year 3, my sales do not change, so I have no change in working capital. I still have accumulated 600,000, which is 400,000, which is 10%. Then we have year 4. Now my revenue drops to 2.4 million. So now I only need 240,000 of accumulated working capital. So I give 160,000 back. Now my accumulated is 240,000, 10% of 2.4. I've accumulated, and now I give that back. So it's positive cash flow in year 4. Again, positive cash flow in year 5. Why? Because year 6 is down to 800,000. 10% of 800,000 is $80,000. I've accumulated $80,000 of working capital through year 5. And then year 6, well, there's no more working capital. There's no more revenue. The project ends, so we have to give back that 80 as another cash flow. And now our net working capital is 0 because there's no more sales. And that's how that works. Then we just do the totals. The project cash flow, the total investment is 6.2 million. That's year 0. My project cash flow is net income plus depreciation minus working capital. Boom, 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 boom. And in year 6, I include the salvage value to the depreciation and working capital, $1,080,000. So now I'm going to discount this all back, this $8,962,500, this accumulated cash flow into 6 years. I discounted back at 12% using the NPV formula at 12%, discounting these 1 through 6. I get $6,083,351. Take the difference between that discounted cash flow and my investment. They lost money, $116,949. And then in the internal, I didn't ask for profitability or payback. The internal rate of return formula, function, IRR, and all I do is paint from year 0 to year 6. Hit OK, 11.36%. So naturally, I lost negative NPV. The cost of capital is 12. So hopefully my rate of return is lower than 12% because I had a net loss of NPV. And that's what we come up with, 11.36%. And notice the template stays the same. The only difference, there's no fixed costs. Everything else is there. Production costs are a variable cost. Unit price stays the same. The volume changes the value, the dollar value. That's a variable cost. So I was looking for 116,649 and 11.36%. 65 points for that problem. Use your templates there to your advantage. So now if you go to week 7, this hybrid week, I've provided a file. It's called Week 7 Capital Budget Analysis Fall 2020 Extra Credit. Now, a few of us qualify for extra credit. Well, I would take advantage of this. Do this problem and get it to me in a couple of days, and I will bring your grade up on the assignment number 3 to a 70. If you got greater than a 70, then you don't qualify. But if you got greater than the 70 and you want to practice this problem, please feel free. I will post the solutions as soon as I get the extra credit work back from those students. And again, this is another template to practice. You could practice this at the last minute to do assignment 4. And even though that's due tomorrow, you can get a couple extra days to post that. You have a little bit you have another format that you can use to make sure you're doing it correctly. And so you don't, if you don't want to post assignment 4's work tomorrow, that's okay. Just send me an email. Professor Hassey, can I get this to you by Tuesday, Wednesday, hopefully by Thursday? Because remember, you got to do uh, your case paper this week too. So here's a problem where I gave you all these variables. Equipment is a $3,400 investment. If the project length is only 4 years. Depreciation, $850 a year, straight line with a salvage of $300. They're going to sell 550 units a year at $11.60. Inflation rate is 2%. Variable cost is $6 a unit. Inflation is 2%. Fixed costs are $2,000 in year 1. Inflation is 2%. The project cost of capital is 11.85%. The tax rate is 40%. Wow, must be in New York or California. And the working capital is 12% of next year's sales. Pretty similar to what we've been doing. I even give you the Wac calculation, which you don't have to be too concerned about, but I wanted to show you how I got it. This Wac calculation is talked about in chapters 12 and 13 based on the market value of the company and the cost of that market value of bonds, debt, stock, and calculating the WAC. You do not have to concern yourself with this calculation. The calculation you're doing in assignment 4 is the calculation I want you to remember for assignment 4 and for the Road King. Do not worry about this, but I wanted to show it to you anyways. So then I took all those inputs and put them into this spreadsheet. Now your job is to fill this in. All the arithmetic lines are there, so you don't have to mess with that. But you have to consider, you'll get all this bottom line, that'll be all tabulated for you, but you got to fill in everything else and do these calculations. So if you want extra credit for assignment number 3, put this little 4-year project together today or tomorrow or Monday and get it to me, and you do it correctly, your grade will increase to a 70 because that's more practice on assignment number 3, which is very important. Also, this will help you review and do assignment 4. There we have now 2 templates. We have this and we have the one from last week that you can use as your guide, and also for the Road Kings case. The final examination will have no spreadsheet calculations involving capital budget. It might have some questions about definitions, but this will be with this week assignment 4, this week with the Road Kings. That's the end of your spreadsheet calculations. I think you'll like that, or you'll agree with me on that one. So again, this is in week 7. A file you can download and fill this out for extra credit or practice, depending on where you stand in our class. And if it's extra credit, email it to me. Tell me you're going to take advantage of this in advance so I know it's coming so I can look for it and put that together. If you just want to practice it, go ahead and practice it. And if you do practice it, I'll send you and post the solutions in a couple of days. And if you want to know the solutions immediately, email me and I'll email you the solution file for this problem for practice. I'm around all weekend. Okay. So where that is, if you go to your Blackboard file folder, go to week 7, that's today, and here's that file, week 7 capital budgeted. Right click it, download it. If you want extra credit, do it. If you got more than 70 on assignment number 3, don't do it, practice it, whatever. So that could be very crucial for some of us in this class to get your grade up and get prepared for assignment number 4. Speaking of assignment 4, here it is. This work is due tomorrow, but again, if you want some extra days to put this together, and you might have already done it, and maybe say, oops, maybe I've done something wrong. You can repost it. You have until tomorrow. If you want some extra time, no problems. We have a lot of work to do in the next 2 weeks. I want to keep it as stress-free as possible. This is a difficult calendar we have for this Kappa Cycle 1 in the fall term. You have 8 weeks to do in normal circles 10 weeks of work. So that puts you under the gun, and naturally I make some adjustments, and you're getting the core or the best out of this, which you might disagree, but it is for future courses. So assignment 4 is asking you to do another capital budget analysis, just like that spreadsheet we did in week 6, just like the assignment 3 spreadsheet, just like the sample spreadsheet I give you for week 7. You have to, though, the only difference is you got to calculate the WACC from our discussions of week 6 right here, using the capital asset pricing model and the after-tax cost of debt. We discussed that in week 6. It's in our class recording video. It's in our work in that spreadsheet for week 6. And then I give you the variables, and you should be getting familiar with these variables. $1 million investment in year 0, life of 10 years. That means a depreciation of 100,000 a year, a salvage value of 30,000, working capital base of 10%, inflation rate of 3%. You inflate the numbers after year 1 by 3%. A tax rate of 30, 40,000 units sold, selling price 40 bucks, fixed costs of 175,000 and variable manufacturing costs of 30. Put those into those spreadsheets, those templates that we now have 3 examples of. One for 10 years, one for 6 years, one for 4 years. I would think we would use the 10-year one from week 6. All right, so now some of us will have a better idea what we're looking for and how to do that from our review of assignment 3 and our work for this review week this week. So see if you can put that together and take your time, get it to me, if not tomorrow, but within a couple of days of this coming week, and that'll be fine. You won't lose any points for getting an extension. Now, this past week, on Thursday, I posted a video briefly going over, not briefly, going over the Road King case, going over some of the details, some of the things you have to be familiar of. You've already probably read all the 4 files that I provided. And now you have to put that together by doing determining the weighted average cost of capital. And some of you have already sent me your drafts of the weighted average cost of capital, and I approved it, told you did the right thing. And remember I said, if you'd like to send me drafts of your spreadsheets, please feel free, and I'll let you know you're on the right track. That warranty is an issue. We talked about that. Putting together the spreadsheet now, especially after assignment number 4, should be beginning to be a little bit more comfortable for you. You've had plenty of practice. And then you have to put together a paper answering those 6 questions involved in the case. Now, again, this is a different from case, but the format is this is a work. In other words, I took this from files a few years back. This paper received a 100% a work, including the spreadsheets that the student provided, along with the paper. This was 100% work. So a good guide as a sample. So notice you have a title page. This is, remember, in APA format. You have an abstract page, which you show or explain what this paper is about, what you're going to try to find in this paper, and your recommendation. This student recommended explains the paper, what's it all about, and what they recommend. The abstract is the introduction. This is what you're going to prove in your work analysis. And then the paper goes through and answers the questions. Now, it doesn't say question 1, 2, 3, 4, which you can do, that's fine. But in an APA format, it does headings. Each question has a heading, and then you explain the answers to those questions in your paper. Now, you can do question 1, but that's not exactly APA format. If you're going to do it that way, question 1, 2, 3, then it's going to be in APA format, but you're going to put it in like a memorandum format, which is not a problem. I don't have a problem with that. But that, just so you know that. And notice there's headings. Here's the financial analysis where the student records and shows how they calculated the WAC, how they determined the cash flow. Notice I blacked out certain things that could help you very specifically with your paper, so I blacked them out. But you can get the feeling and the view of how this was set up, how the student explained various things. Even this is why the student got 100. The student put in graphs. The student put in tables or charts or copied a section of their spreadsheet into the document. They didn't put all the spreadsheet information into the document, cut and paste. They just put specific things to highlight their writing. So a nice chart. Look at this. Here's a summary of cash flow. Not the specific year by year or line by line, but a summary. And then if I want the details, I go to your specific spreadsheet analysis. Remember, you're submitting two files, the paper file and the spreadsheet file. Spreadsheet file will have your WAC calculation and a capital budget analysis for the Detroit engine and the Marcus engine. Okay. And then notice the student did a recommendation, a conclusion, tying into the abstract and summarizing in a very nice professionally made paper in nice graphics. Instead of just writing for 5 or 6 pages, the student broke it up by putting in charts. It really tells me that the student made an effort to really prove their point and this paper. Very impressive. That's why it's 100. I don't give hundreds very often in these papers, but I wanted to show you this. Again, another summary of the key areas. Remember, we have to find these 4 points. They summarized them right here as part of their recommendation to the project. And then they talked about outside consultants who they interviewed or decided to talk with. Notice they interviewed the professor. They listed those consultations as references in addition to the other academic or article references about some of the material in the work. That is a 100% assessment paper. So this is the format that even if your numbers are not entirely right, which it's how you interpret them, and that's not a big deal, but how you present your paper and your analysis, and this is the perfect, I hate to use the word perfect, this is 100% grade because it combines professional APA format. I know exactly what the flow of the document is, proper headings, page numbers, charts, tables from the spreadsheets that summarize key points, a recommendation or conclusion, and then a listing of sources, both verbal and research references. That's a 100 paper. I wanted to show that to you. I know some of you are going, good Lord Almighty. But that's what I'm looking for. Whatever shape or format you use, you present it with those key issues. It doesn't have to be exactly like this, but show me in a professional business student manner, what do you recommend? What is the case for Road Kings in this format with your supporting documents, the spreadsheet file with the 3 tabs, WAC calculation, Detroit engine, Marcus engine, capital budget analysis. Send me those drafts and I'll be happy to look them over. And again, this is located in your Blackboard file folder under Road Kings. Right there. There's the paper sample. That might be helpful to some of you. Again, this paper is due next Saturday, but again, just send me an email during the week. Mr. Hassey, can I get this to you by the 30th, by the 28th, by the 29th? That's fine. Remember, next week on Saturday, you get the examination, and that's due on the 31st. But you can probably do both in the same week if you want to manage that file. I have no problem with you getting an extension on this, especially now with this additional material that might help you fine tune your work. And speaking of the final, remember I told you there's a study guide. Now, a couple important dates about the final. There can be no extension on the final. It has to be received by midnight, October 31st. Sorry, Halloween, but who's doing much on Halloween this year? And also, I will post the final grades to this class by Thursday, November 5th. By November 5th, you can go to Blackboard and see your course grade. If you got a beef, let me know about the grade. I'll explain it to you. You will see your final course grade if you complete the course evaluation. Now, I don't know if Laverne has sent those course evaluation emails out, but I have provided that information in your study guide to do. The course evaluation is a part of this course. You evaluate the material, you evaluate me, you evaluate the course setup. It's an important aspect of this course, and that's something that I won't be giving you any extra points. But if you want to get your grade quickly, fill out that evaluation and you'll find your course grade on November 5th. If you don't decide not to do the course evaluation, which is not going to affect anything, it's just that you won't see your course grade until it's posted by the registrar, probably a couple weeks down the road. Just gives you the option of getting your grade quicker. So let's take a look at that study guide. Nothing fancy. This gives you a little bit of brief background of what the study guide or what the examination is going to be. There's four sections. Multiple choice on chapters 1 through 9, very similar to our assignments. Definitions. We didn't have a midterm. I guess you could say the midterm was our assignment number 2, so don't worry about the midterm section of that. Fill in the blank from chapters 10 to 13. Those are the capital budget analysis chapters where we've been doing all these spreadsheets, but you don't have to do any more spreadsheets. But I'll have some questions about what those spreadsheets tell us, how do you interpret them, type of fill in the blank questions. Then there's some short answer questions from chapters 14 through 17. That's our lectures for next week. If you look at the agenda this week, I've given you in week number 7 the pages that I'll be covering from those chapters, the sections that I'll be covering from those chapters next Saturday morning. That will be the material in this short answer section, which is, as you can see, 35% of your grade. Naturally, it has the highest weight because it's the newest material. And then we'll do a portfolio evaluation. Who's going to be our Wolf of Wall Street? And that's you're going to evaluate your portfolio as of Friday, October 30th. So you can't do the examination and post it to me by October 29th or 28th, because you can't post it unless because you got to do the portfolio evaluation as that last Friday. And you do the work of gains and losses in dollars, comparison to the market. How did the market perform in percentage gains, and how did you outperform the market? We've done this before. And if you have any questions on that, we'll review that next week in class. That's the final. It's take home. You have as much time as you want by October 31st. And we'll take a look at this, and then we'll review some fine points of it next week in our afternoon session. Once that final is posted, I'm going to post the final around the noon hour next Saturday. And then our after lunch break will concern itself with the final examination and any open items on the Road Kings case. And that's our class, our last class next week. God, time goes by fast. So then I remember I told you about the course evaluations. If you look on the second page of this, I give you the information about course evaluations. Now, supposedly, Laverne sends you an email to announce your evaluations, but Sometimes they're a little slow on the gun of this, but you can go into your My Laverne account through the portal and click on course evaluations, and it will launch the evaluation for this course. If you post that by Wednesday, November 4th, I don't see your evaluations. If you say Professor Hassey is a big jerk, I don't see that. If you say Professor Hassey is a wonderful man, I don't see that. All I see is that's everybody who completed the evaluation. I won't get this report for like 3 months. First, it goes to the department, the president, the provost. They look it over, want to make sure everybody's doing their job, making sure the students are getting value in their course. And then I'll get these results, and they don't mention anybody's name. They just summarize and take and do a review of the evaluation. I never know who says what, and that's the right way. It's all anonymous, confidential. But it's important for it to be done. If you post that by Wednesday, November 4th, your grade will be in Blackboard on November 5th. If you forget to post it or don't do it, when I post your grade, it'll just be blank. You'll see all the rest of your grades, but you won't see your course grade. That'll be blank. Now, sometimes students go, "Oh, that's okay. I know I can calculate that by just averaging up all my grades." Well, no, yes and no. You can do that. It'll give you probably a close approximation of your grade. But remember, I weight certain segments of the grade. There's still 5% more to be posted next week for class participation. There's still 20% for the final, 15% for assignment 4, 15% for the case paper. 15, 30, 50, 55% of your grade will be posted in the next 2 weeks, half the grade. So that's why we need to be engaged and involved in these last 2 weeks of our class, because it'll pretty much decide what your course grade will be for all that hard work. So this is in the final examination outline, course evaluations. And I'll talk more about this next week if any of you are confused by it. But again, I treat it seriously, and you should too, because I always hear students say, this professor was great, this professor was lousy, this class was lousy, I hate online. Okay, fine. But for us to do a better job, you need to let us know about that. You're paying for this, or somebody's paying for this. And if we're not doing our job, or even if we are doing our job, you should let people know. It's just like voting in a couple weeks. I can't stand it when my neighbor says, "Oh, this son of so and so, this so and so." I go, "Are you going to vote next in 2 weeks?" "No, I'm not registered." "Really?" So I don't even want to hear about you're mad or have complaints about so and so. I don't want to hear about it, because if you didn't bother to register, forget it. So when I hear students yay or nay about a particular class or program, the first thing I say to them, "Oh, did you do a course evaluation?" "No, I didn't know about it." "No." "Well, you know about it in this class." So please take the time to do that. All right, I won't harp on it anymore. But it's a sticky wicket with me. I encourage students. I've done it all my life. If you got a beef, a problem, let people know. Just don't stay in the background and mumble and moan about your life. Do something about it. Fix it by voting, by telling people what's going on. If you want to be a good businessman or a good businesswoman, you got to be aggressive. You can't just stay in the background. You got to be a leader. Okay, enough of that. Okay, I'm going to let you go. But before I do, remember our lecture next Saturday, 8 a.m. I'll bring the coffee. We'll talk about assignment number 4. We'll talk about Road Kings. We'll talk about final examination review. And we'll talk about in the morning session these 4 chapters, 14, 15, 16, and 17. Here are the sections and pages you should concentrate on. So you don't have to read all the chapters. Here are the PowerPoints from those chapters, but my lecture will concern itself on corporate finance, initial public offerings of stock, debt financing and capital structure, and dividends and how companies pay out dividends to investors. That's the lecture for next Saturday's class. In the morning session and in the afternoon session, we will review the outline, review the final examination and set you on the way to finishing up this course. A lot of material. You guys have done well. So again, for some of us, take a look at assignment 3, maybe think about doing that extra credit problem, getting to practice a little bit more. For others of us, the discussion of today might help you with a little bit with assignment number 4 and the Road Kings. We have a sample paper to review or to look at, which might help you. And then we can cover all this material next Saturday, October 24th, our last class in our Business 330 class this fall, Cycle 1 for the CAPA program. Again, if you want an extension on assignment 4 for tomorrow, just send me a quick email this weekend. Mr. Hasse, you don't have to tell me the reason why. Can I get an extension until, just tell me when you think you'll be able to post it so I can just plan accordingly. If you want an extension on the Road King paper next Saturday to another day in the following week, no problem. Send me an email this week and that'll be granted. No extensions on the final examination. Everybody, thanks a lot for stopping in this weekend and making sure you're staying up to date and getting ready for these final couple weeks of our class. You've worked hard. Your grades are all up to date. 45% of your grade has been determined, but now we have 55% left to do over these next 2 weeks. No pressure at all. You're all doing well. Thanks a lot, everybody. We'll see you next. I'll have an introduction video on Wednesday going over specifics for next Saturday's class, and we'll see you all next Saturday morning at 8 o'clock. Have a great weekend and be safe. Bye-bye.